Welcome to the first video of our special coverage of the Union Budget 2023-24 and the Economic Survey. The highly anticipated announcement in the budget is change in the income tax rates. So we start our coverage with the changes in tax rates. This year, the Finance Minister obliged with reduction of tax rates for individuals and some other SSCs. Before we go into the details of these changes, please share and like this video and please consider subscribing to our channel. Please do not forget to hit the notification bell. The general tax rates for individuals, Hindu undivided family, association of persons, body of individuals, artificial judicial person had the slab rates of up to 2,50,000 basic exemption, 2.5 lakh to 5 lakh 5%, 5 lakh to 10 lakh 20% and above 10 lakhs 30%. Above basic exemption is Rs 3 lakh for a resident senior citizen that is of age above 60 years but less than 80 years in previous year or first day of the assessment year. However, if the resident individual is of the age above 80 years, the limit is Rs 5 lakhs, resident super senior citizen. Rebate under Section 87A. Income tax rebate limit under Section 87A is Rs 5 lakh. Hence, if total income does not exceed Rs 7 lakhs, a rebate of lower of Rs 25,000 or tax amount is allowed to the SSC. The rebate is not available from capital gain under Section 112A. Special tax rates for individuals, Hindu undivided family, Section 115 BAC. A new Section 115 BAC of the Income Tax Act was added by the Finance Act of 2020, giving individuals the opportunity to choose between the old regular tax rates and new concessional tax rates without taking into account the legal requirements for exemptions or deductions. This scheme is applicable for both resident and non-residents. As per the Union Budget 2023, the tax rates under the new tax regime as per Section 115 BAC are as under: up to Rs 3 lakh nil, from 3 lakh to 6 lakh 5%, 6 lakh to 9 lakh 10%, 9 lakh to 12 lakh 15%, 12 lakh to 15 lakh 20%, above Rs 15 lakh 30%. Hence, under new regime, an individual with an annual income of Rs 9 lakh will be required to pay only Rs 45,000, that is only 5% of his or her total income. It is a reduction of 25% from what he or she is required to pay now, that is Rs 60,000. Similarly, an individual with an income of Rs 15 lakh will be required to pay only 1.5 lakh or say 10% of his or her income. It is a reduction of 20% from what he or she is required to pay now, that is 1,87,500. If SSC opts for Section 115 BAC, the total income shall be computed without any exemption or deduction under the following provisions. Chapter 6A, except those under Section 80CCD and 80JAA. Section 24B, that is deduction of interest on loan taken for house property. Clause 5, 13A, 14, 17 and 32 of Section 10, Section 10AA and Section 16. Section 32 subsection 1, 32AD, 33AB and 33ABA. Section 35, 35AD and 35CCC. Clause 2A of Section 57, house rent allowance under Section 10 subsection 13A, deduction for entertainment allowance and employment professional tax under Section 16. Rebate under Section 87A. Union Finance Minister Nirmala Sitharaman has proposed a new tax regime under which income tax rebate limit has been increased from 5 lakh to 7 lakh. If total income does not exceed Rs 7 lakh, a rebate of lower of Rs 25,000 or tax amount is allowed to the SSC. This rebate is not available from capital gain under Section 112A. Hence, under new tax regime, if the total income of individuals or HUF is up to Rs 7 lakh, there is no tax at all. Proposal for salaried class and pensioners. For pensioners, the Finance Minister announced extending the benefit of standard deduction to new tax regime. Each salaried person with an income of Rs 15.5 lakh or more will benefit by Rs 52,500. Leave encashment. Lastly, the limit of Rs 3 lakh for tax exemption on leave encashment on retirement of non-government salaried employees was last fixed in the year 2002 when the highest basic pay in the government was Rs 30,000 per month. In line with the increase in government salaries, it is proposed to increase this limit to Rs 25 lakh. General tax rate for cooperative society, slab rate, up to Rs 10,000 10%, above Rs 10,000 up to 20,000 20%, above Rs 20,000 30%. General tax rate for firm or local authority, flat rate of 30% is applicable. General tax rate for company, In case of a foreign company, income tax rate is 40%. In case of domestic company, if the turnover or gross receipt of previous year 19 to 20 was up to Rs 400 crores, income tax rate is 25% and otherwise the applicable rate on domestic company is 30%. Surcharge. Surcharge is essentially a tax levied on tax. It is calculated on payable tax, not on income generated. So a surcharge of say 10% on an existing tax rate of 30% effectively raises the total tax rate to 33%. Surcharge for individual, Hindu undivided family, association of persons, body of individuals, artificial judicial person. Union Budget 2023 has kept surcharge up to total income of Rs 5 crores unchanged. For those with an annual income in the range of Rs 50 lakh to Rs 1 crore, the surcharge of 10% is applicable. Similarly, those earning Rs 1 crore to Rs 2 crore yearly, the surcharge applicable is 15% and a surcharge of 25% is charged for those with annual income between Rs 2 crore to Rs 5 crore. As per the Union Budget 2023, surcharge on annual income above 5 crores has been reduced from 37% to 25%. Due to the above change in surcharge, maximum marginal rate drops from 42.74% to 39%. Surcharge rate of 25% and 37% is not applicable on STCG under Section 111A, LTCG under Section 112A, dividend income. Surcharge for company. Rate of surcharge for domestic company and foreign company are as follows. Up to Rs 1 crore, domestic company and foreign company, nil. Above Rs 1 crore up to 10 crore, domestic company 7%, foreign company 2%. Above Rs 10 crores, domestic company 12% and foreign company 5%. Surcharge for firm, local authority, cooperative society. The rate of surcharge for firm, local authority or cooperative society is 12% if the total income exceeds Rs 1 crore. However, no surcharge is applicable if income is up to Rs 1 crore. Tax rates on capital gain. Section 111A, tax on short-term capital gain. Short-term capital gain earned on sale of listed equity shares, unit of equity-oriented fund and unit of business trust is taxable at 15% under Section 111A. Any other short-term capital gain is taxable at normal rates. Section 112A, tax on long-term capital gain. Long-term capital gain above Rs 1 lakh earned on sale of listed equity shares, unit of equity-oriented fund and unit of business trust is taxable at 10% under Section 112A. LTCG up to Rs 1 lakh above section is exempted. Section 112. Long-term capital gain not covered under Section 112A. Any long-term capital gain earned by a resident SSC or domestic company other than Section 112A is taxable at 20%. If capital gain under Section 112 is earned by any non-resident or foreign company, if LTCG is on sale of unlisted securities of private company, tax rate applicable is 10%. In any other case, tax rate applicable is 20%. Health and Education Cess. Health and Education Cess is levied at the rate of 4% on the amount of income tax plus surcharge. Budget 2023 Other Proposals. Average processing time for ITRs reduced from 93 days to 16 days. It is intended to roll out next-gen common IT returns forms and strengthen grievance redressal mechanism.